The property market is rising, but there's so much confusion as to whether this rise will continue and lead to a whole new boom, or whether this is a dead cat bounce, which means it will rise and then things will start getting nasty and it will fall and then rise at a later time. In this episode, I'm basically going to give you a property market update around the grounds. Recent price changes nationally and city by city, what price range properties are doing the best, listing and building approval numbers, the supply side, which is really important, especially in these times, interest rate predictions, and whether regional Australia is still hot or not. Lots to cover. Let's get into it. So all this data is from CoreLogic. The first thing I want to share here, residential real estate value. The value of residential real estate is $9.5 trillion. And check this out, the outstanding mortgage debt is $2.2 trillion. So yes, this 9.5 has come down, a bit in the last, 6 to 8 months. However, still people don't realize that of this 9.5 trillion, only $2.2 trillion is actually in debt or has a mortgage or loan against it. So, when the RBA does all of their quantitative tightening and all this sort of stuff, yes, it makes a difference, but not to the majority of people. So overall, in the last 12 months, yes, property prices have gone down 8%. Now, I have to obviously say that there's markets within markets like Queensland, regional, Perth, so many other places as part of South Australia have been positively growing, even though it says -8. There are locations in the last 12 months that have gone up 20%, 30%, right? So this is just overall. We'll get into some of the nuance a bit later, but this is what is interesting. In the last 3 months, against all odds, I thought the bust would last a little bit longer on a national level, but it's already started to go up 1% in the last 3 months. So which areas have been performing the best in the last 3 months? So you have overall Australia, then you have combined capitals doing really well, and then regionals have not been doing that well. Okay, let's get into that. So regional Northern Territory doing well, not that I've really ever bought a property there or recommend it. Tassie going backwards, unsurprising. The just amazing boom it's had even pre-COVID and to COVID as well. So you can see here how the overall numbers mask the reality. Regional WA 1.2%. A lot of that is mining towns that I don't endorse, but nonetheless it's going up. Regional South Australia is outperformed by a long way. This is just the last 3 months. Okay, so if you want to look for an annualized figure, just roughly speaking, just times it by 4, that's almost 10% capital growth for regional SA on an annualized basis. Regional Queensland, like I said, Victoria and New South Wales going backwards, Queensland just up a bit. So there's nuance in there now. So you have to really be prescriptive about where you buy and what you buy. When it comes to capital cities, Canberra, Darwin, Hobart, all going back in the last 3 months between 1 and 2.4%. Perth, if you've been following me, we're bullish on Perth. So that's obviously gone up. Adelaide, Brisbane, just kind of around that 0 mark. Sydney, I didn't know that this would happen. I did not anticipate it. I just think there's a lot of foreign money and local money, big money on the sidelines. When you go to auctions in Sydney, a lot of the Indian community, the Asian community, etc., they're just bidding prices up. That's obviously generalization. It's not going on everywhere, but I definitely didn't see this coming. And I'm a little bit concerned about Sydney, to be honest. It's the least affordable city, not just in Australia, but I think actually all over the world. 12-month changes. Now you can see, of course, this is aggregate data, but basically everywhere has gone backwards except for regional WA, regional Northern Territory, and regional South Australia. Love South Australia. Not so much now, but we bought so many properties in Mount Gambier. Perth has actually bucked the trend. So in the last 12 months where everyone was crying property crash, Perth actually performed well. And as you can see, somehow Adelaide as well. So, for you, watch my videos, go back and look at the commentary, listen to the commentary, the data, the charts that are more important than my opinion that I was saying 12 months ago, 24 months ago, maybe even further back. And you know that I've been so bullish at that time on Adelaide, Perth and Brisbane, and of those areas, Perth and Adelaide particularly, and those are the ones that have fared the most, even in the property bust. They've kept increasing. So this is a really cool chart. So it's capital cities. Basically, there's that decline, 2021 and April, that was the top of the boom in terms of dwelling prices, in terms of their growth rates, and then it was kind of bottoming out over in this period in mid to late 22. And then in this year, since February, basically prices have started to go up. Now, do I reckon there's going to be another boom and it's going to go all the way back up here? I actually, like, I know I'm a property guy, but I just don't see a massive property boom happening this year. I think it could happen in the next year, 2024, maybe 5. Nonetheless, I do think Perth and some other places have performed extraordinarily well and have their own little mini booms and, you know, make a lot of cash flow and capital growth. But a national boom, I don't see it coming. So for anyone who thinks that, oh, look, this is going to go all the way up there, I personally don't see it. Of course, markets within markets, but I think, you know, we might see a little bit of a drop mid this year and then a rise, continuation of that rise thereafter. Now, what's interesting is seeing how different price bracket properties perform differently. And normally what happens is that in any city or town, the most expensive properties closer to the CBDs or lifestyle locations, they grow the most, the first, okay? And then it's the middle category and the affordable category that catches up. That doesn't mean the middle and affordable category don't grow just as much as the premium category. They just grow a bit later. Okay, they just grow a bit later. So if you can time that, you can get higher yields, which the affordable category affords, and over the medium to long term, they do just as well. So there's this sort of cycle, and on the downside, on the downturn, it's the premium category that falls the first, and then the middle, and then the affordable category. But interestingly, the affordable category falls also the least. Not only is it last to fall, it's also the least in terms of falling. If this is based on 30, 40-year data. So what you're seeing here is definitely the new growth cycle of Sydney has started. I'm not saying this will continue, but as you can see, the premium side, properties in the 75th percentile and above, so let's call it above 2 million or 3 million properties, they've started rising the most, okay? This dark blue is the strongest or the highest. Same with Melbourne, same sort of phenomenon. In fact, you can see the affordable category still falling from the retraces of the last boom. Brisbane, as you can see, is quite frankly still in that last boom cycle. Okay, so the affordable category is still rising the most whilst the premium category is falling. So I would say Brisbane is still kind of stuck in that last cycle. It's not hit the new cycle yet where the premium end of the market is growing. It's still in the end of the last period of its cycle. And the same can be said about Adelaide, where the premium properties are falling and the affordable properties are still increasing. And in Perth, you can see where, you know, places like Subiaco, which are close to the CBD, have already gone up 30%. You know, that's really where the boom starts. It's now rippled out, and you've got the more middle market and affordable properties that are really seeing the highest price gains. And you can see Hobart just down all the way, and Darwin and almost ACT as well. I won't label the subject, but just a quick walk through each city. So you can see Sydney is just kind of bucking the trend in its last down cycle. In April, Sydney dwelling prices rose 1.3%, 3% over the last quarter, and obviously in the last 12 months, down 10%. Very similar story for Melbourne, you know, almost identical, but a bit shallower on the up and downside. Brisbane, you can see, like I said before, it's still in that last cycle, really. It's still heading downwards on an overall basis, like, you know, last quarter barely scratched the surface. So I think Brisbane actually has a little bit more downside risk in the very short term, next 6 months, versus Sydney and Melbourne. It's still kind of in that last echelons of its last cycle. Adelaide is much the same. As well, where the premium properties are still falling, cheap, affordable properties are still increasing. Perth is, you know, obviously different. It never really fell in value. Over the last year, it grew 1.3% and across the board is growing. Hobart across the board is falling. Darwin is also just a bit of a basket case at the moment, as is, you know, as Canberra. Now, days on market is like a really interesting statistic because it shows how long does it take for a property to sell, you know, from the point it's listed to the point where it goes unconditional. Generally speaking, that's the metric. And you could see in the property boom that we had, you know, like starting 2019, ending start of 2022, you could say median days on market was coming down, little bit up, and then sort of down, all the way down here. So it's like a really good indicator of demand, how quickly properties are selling. And then when interest rates started rising, of course, this is aggregate data, demand softened out, went up again, and now it's coming down again. Now, do I think it could come down to this level? I certainly think it could. That doesn't mean there'll be a full COVID property boom again, but you can see that we're right at the start of the precipice of another growth phase, generally speaking. And then vendor discounting is once again another indicator of demand. What it means is that versus the listing price, how much discount do vendors or sellers have to give to buyers in order to sell their property? You can see that actually vendor discounting is still negative, okay, across both combined capitals and combined regional centers. So this light purple, which is regional centers, is the strongest. It's actually showing that in the last sort of 8 to 10 months, vendor discounting got even more tighter. In fact, what that means is that prices actually sold, or properties actually sold for higher. There's been a huge negative discount, no discounting going on. In fact, negative discount going on, even more so than capital cities up here. So regional, has always been strong, has never lagged capital cities in terms of this metric, and it is actually just pulled ahead, a clear bias towards some regional markets. Now, this is the supply side of the story. A lot of people are just wondering, why isn't the property market crashing? Got cost of living issues, inflation, you've got interest rates going up, even though it only impacts 20-30% of the market, like I said earlier. It's because of this. It's listings. You can check this out, this dark blue line, 2023. There's just so much less on the market for sale than there was in the last year, 2022, or the last 5-year average, which is this red line and this dotted line, respectively. Of course, this is accounting for seasonality. So even right now in April, there's so many, thousands of less listings compared to long-term averages and last year. So, for those people who think, oh, look, prices are going to fall because interest rates are rising, mortgage cliff, fixed income cliff, all this kind of thing, that's going to have some impact. But don't forget that for 70% of borrowers who are on variable rates, they've already increased their interest rates that they're paying. They've already experienced that fiscal cliff, or that, fixed income cliff. For the 20 to 30% of people who were on low rates, 2 or 3%, now going to experience 3%, 6%, they're going to have time to come up with the money. The last thing they're going to do is sell their house, right? They're going to work 2 jobs, they're going to cut back on other things. But so I do expect some foreclosures, you could say, fire sales to happen. But so long as this listings line is so low, even if it gets close to the 5-year average, if it's so low, there's just going to be so little supply in the market, no one really having to fire sell except a really bargain basement price, and therefore the property market holds up and continues to rise. And this is a really interesting way to show it, okay? Listings as a percentage versus last year, the equivalent period last year. So in Perth, at this time last year, there was more than 20% more listings, or in other words, right now there's less than 20% versus last year. So that means supply is 20% lower. Even if demand is consistent, which it's not, it's going up in Perth, that means prices rise. Okay, in Hobart, it's the opposite. Many more listings. That's why prices are going down. Property markets are predictable. They're not just some enigma that you have to look into a crystal ball for. So I'd be a little bit cautious buying in regional New South Wales or regional Victoria, because listings are going up as they are in Tasmania. But in regional South Australia, regional Queensland, Brisbane, Perth, they're so low. Listings are so low. Demand is so low. As long as demand is going up, you're getting both ends working for you, demand and supply, then you're likely to see some really good short-term and medium-term gains. Rental rates are really interesting. Okay, the annual change in rent rates, so it's been kind of nothing before COVID, but because of additional demand, immigration, and also no new buildings, basically, in a period of time around 2022, 2021, this number has just skyrocketed, right? Annual change 10% consistently. So it's kind of not that fun to be a renter right now. And so this is illustrating that. The areas where rents have gone up the most is in Perth and then Sydney, basically combined capitals, to a large extent regional WA, regional South Australia, regional Queensland. And then what does that mean for yields? Of course, as investors, we're concerned about yields. We want cash flow. The gross rental year average in Australia has gone up because property prices come down and rent's gone up to 3.9, and you can see regional Northern Territory has the highest at 6.7. But as you know from the posts that I do every 2 days, I post a client deal, or anyone really, even with or without the course, you can get 6 to 7% gross yields in regional SA. You can get them in regional Queensland. You can get them in Perth, even though the average is just 4.9. So these averages, take them with a grain of salt. They shouldn't kind of mean that you invest in one location versus another. There's always suburbs within suburbs. And then this is a really, really interesting chart. I just want you to understand monthly house versus unit approvals. Okay, I'm just going to focus on the house ones, which is the lighter purple line. So building approvals or dwelling approvals are basically like developers going to a council saying, hey, we need a development approval to build these amount of houses. Okay, 1,000 developers do that, one house each, that's 1,000 development approvals or building approvals or dwelling approvals. Now what's interesting is that it's come down to here, right? It was up here because of home builder and all the stimulus that the government put out there during COVID to re-kick the construction industry and kick it into gear. It's come down, 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 down. Notice this level here, okay? Last time it was close to this level was around March 2020, right at the start, or a few months before the last huge property boom. Before that, this level wasn't seen till about March 2011 or 2012. Incidentally, that was the start of the previous property boom, mostly centered around New South Wales and Victoria at that time. Okay, I can go back and there's a clear correlation between dwelling approvals and property booms on a national level. So if this continues to go down, despite what interest rates may or may not do with all the immigration coming into Australia, it takes a brave man to sort of bet against the property market and say that property prices won't go up a long way. Finance and lending, there's a clear correlation. I've demonstrated this in other videos, especially 2 years ago. I talked about this stuff a lot. Clear correlation between finance approvals, like I go to the bank or through a mortgage broker, I want a loan, they give me an approval, like a pre-approval. That correlates directly to property price increases, because the more people with pre-approval, they're ready to go, the more people buy houses. So that's clearly been going down for both owner occupiers and investors, obviously, in the last sort of 8 to 9 months. But this may or may not continue. It may be a dead cat bounce, but it's kind of just ticked up a little bit. Let's monitor this space for another 3 to 6 months to see if this continues at a national level. But if it does, then that is definitely a forewarning of another significant rise in property markets at the national level. Of course, there's always markets in the market, so you can't really take anything from this video and say, should I buy or should I not buy? It's always a good time to buy, provided you know where and how. But this is just commenting on the national level statistics. And this slide is on the RBA. It's obviously lifted its cash rate to 3.85. And so here we are at the moment. It gives you a bit of perspective, right? Like how low we were, basically at zero, and it's just shot up. Okay, like a firework almost. I started my property investing back in 2011, and I'm not even that experienced. So those of you who've been in the game maybe 30, 40 years, you kind of know you've been experienced almost 18, 19% interest rates. So this is very much, not that shocking for you. And I would encourage those of you who are new to Australia or to the property market to getting a loan, also not to be shocked, because these aren't actually high interest rates at the moment, I must say. They're about average or still a little bit less than average versus the long term. So I would really say look at where you're buying, what you're buying, make your decision based on long-term cash flows, not just short-term whether the property market is going to collapse with another 1 or 2 interest rate rises, which is basically the market consensus. And so right now, depending on which bank you're in, right now the interest rate that you should be getting whether it's a short-term fixed or long-term fixed or a variable rate, is somewhere between 5 and 6%. The long-term average is, of course, 6 to 7% or thereabouts. So whether it's owner-occupiers or investors, you should be getting somewhere around that sort of 5.5 to 6, maybe low 5s. So if you're not getting that, unless there's a particular situation, you might want to consider going to your mortgage broker and refinancing, or at least investigating it. But I know everyone's always interested who's got the lowest interest rate. If you're kind of between 5 and 6 right now, you're pretty much on the money. And for those of you who think, hey, like, how can the property market continue going up? Haven't we just had like a huge boom and not that much of a bust, and everyone is over leveraged to the hilt, leveraged in debt up to their neck? What's interesting is this statistic. The percentage of loans on interest-only terms has actually fallen since June last year. The percentage of loans originated with a loan-to-income ratio of more than 6 times, in other words, people really stretching their budget to get a loan, that's actually fallen a lot. The highest was actually in December 21, which, was a long time ago. It's consistently fallen. There's a bit of latency or buffer now in those people getting loans. And the percentage of loans originated with a debt to income ratio, so not just that specific loan, but looking at your whole portfolio, your whole household debt, that's actually fallen from a high in December 21 to basically a low, December 22. So those people in the market pushing prices up in Perth, regional, that's South Australia, Queensland, parts of Sydney, etc. These people are not like leveraging to their eyeballs. They are actually buying properties they can afford to a large extent. In Sydney, it's debatable, right? There's pockets of, just cashed up people, but by and large in the rest of Australia, it's sort of sustainable, believe it or not. And the last chart, thank you for staying with me, by the way. Regionals, was the regional boom just because of COVID? A lot of people have misinformation about this and think that regional's terrible to invest because it's only COVID, a once in a lifetime thing that caused regional Australia to boom. Actually, no, it's still doing really well. So the proportion of sales in regional Australia is at 37%. This 35.3% dotted line, that's the long-term average. And so you can see, the interest, the fervor, the price rise, the number of sales, etc. in regional Australia was actually beyond its long-term average since about 2018. Back here, that was well before COVID. Okay, so you've got places like Bendigo, Geelong, Ballarat, etc., that were just doing really, really well. So anyone who thinks that, oh, hey, COVID is finished, COVID boom is finished, regional Australia is no longer going to perform, like, that's just not the case. These things happen in cycles and in waves, and you need to understand the relationship between capital city price growth and regional. One goes up, the other one catches up, then the other one goes up, the other one catches up. But of course, it's really hard to buy in Sydney where the average price could be $1.5 million when it costs you $25,000 to hold that property as an investor. So regional or smaller capital cities like Brisbane, Perth, Adelaide, by and large, a better option if you are invested for the long term and want to build passive income. That was it, basically, guys. I hope you got value. I'm not saying whether there's going to be a big boom or not, but I do think that there could be a bit of a dead cat bounce in places like Melbourne and Sydney. Other places are still very affordable. Rents are going up. It's sustainable. And I think places like Perth, prices are going to continue going up. Not at boom levels, but hey, much, much, much better than the rest of Australia. I think it's worth investing in some of these areas right now for the short term, medium term, long term, as long as you know where and you know why. Always remember that none of this stuff is actually as important as the real estate in your head, between your two ears, the 6 inches. So invest in that first, not in anything else. Don't buy a block of dirt before investing in yourself. To do that, I'll leave links below to my podcast, Australian Property Mastery with PK, on Spotify, Google, and iTunes, and also the Facebook group with more than 30,000 amazing community members, Australian Property Mastery with PK, in the links. And that way you can actually understand what you're doing and do it correctly without making any mistakes. Hit the subscribe button, give it a like. See you next time. Catch ya.